I used to think the biggest threat to someone's financial future was a bad investment or a layoff or some huge unexpected disaster. I was wrong. It's a wedding loan. A loan people take out willingly for one single afternoon. Let me show you this through Diane. Somewhere out there right now, a woman named Diane is $245,000 in debt, not from a house, not from a business, from a wedding loan that paid for one day, actually two, because she funded both of her daughters' weddings back to back. And here's the part that should genuinely unsettle you. The people taking out the biggest wedding loans are statistically more likely to be divorced within a few years than the people who spent almost nothing on the exact same kind of day. This is her story, and by the end of it, you're going to understand exactly why the cheapest weddings tend to build the strongest marriages, and it has nothing to do with luck. Diane is 58. She works in office administration, a steady, unglamorous job she's held for 2 decades. The kind of job that pays the bills reliably, but was never going to make anyone rich. She raised two daughters, mostly on her own, and when the first one got engaged, Diane felt something she hadn't expected, a kind of quiet panic, not about the marriage, about the wedding. She'd spent years watching those bridal shows where four brides compete and get scored against each other at the end, and somewhere in all those hours of television, without ever meaning to, she'd absorbed a very specific idea, that the size of the wedding was proof of how much she loved her daughter. So when the venue quoted $40,000, and the florist quoted another $9,000, and the photographer wanted $6,500 for the day, Diane didn't say no. She said yes. And then she found a lender who specializes in exactly this kind of yes. Here's something almost nobody explains about the wedding industry, and Diane learned it the hard way. The moment a vendor hears the word wedding, prices change. The same venue that rents for $2,000 for a corporate event suddenly costs $12,000 for a ceremony. The same catering company that charges $40 a plate for a birthday party charges $140 for a reception. Some couples have learned to book venues and order cakes without ever using the word wedding out loud, just to avoid the automatic markup. And the fact that this workaround exists at all tells you everything about how the pricing actually works. It's not a conspiracy. It's a market that figured out decades ago that people planning a wedding are emotionally primed to say yes, rarely comparison shopping the way they would for anything else that expensive, and vendors priced accordingly. Diane's first daughter's wedding alone ran close to $95,000 once every line item was added up. The dress, the flowers, the open bar, the string quartet nobody remembers hiring by the end of the night. 18 months later, her second daughter got engaged, and Diane felt something worse than panic. She felt obligated. If she'd spent $95,000 on the first wedding, how could she spend less on the second without it looking like favoritism? Without her younger daughter quietly wondering for the rest of her life whether she'd been loved a little less than her sister? So she took out a second loan, this one for $150,000, telling herself it was simply fairness, simple arithmetic, the kind of math that feels perfectly sound at 11 at night and completely insane the moment you say the total number out loud to another human being. And by the time both ceremonies were finished, Diane owed $245,000 on a combined income that had never once approached six figures. Let's talk about what that number actually means in practice. At a typical personal loan rate for an amount that size, Diane's monthly payment runs close to $2,800. Her take-home pay is roughly $4,100 a month. That's not a tight budget. That's 68% of her entire income going to two parties that ended, both of them, in under 6 hours combined. And that's before counting the smaller expenses that quietly rode along with the big ones. The engagement ring insurance, the bridesmaid gifts, the rehearsal dinner nobody budgeted for until it was suddenly happening in 3 weeks. Weddings rarely blow the budget with one giant purchase. They blow it with 40 small yeses that each felt too minor to argue about in the moment. The upgraded chair covers, the extra hour of the DJ, the favors nobody at the reception even remembered to take home. Here's the part of Diane's story that should stop you cold, and it connects to something researchers keep finding when they study wedding spending. Couples who spend heavily on their wedding show a meaningfully higher rate of divorce within the following years compared to couples who spent modestly. Nobody's entirely sure why, but the leading theory is almost too simple to believe. A big, expensive wedding is often the first major financial decision a couple makes together. And if that decision was driven by pressure, image, and debt instead of what the two of them actually wanted, It sets a pattern for how every future financial decision in the marriage gets made. The wedding isn't the cause of the divorce. It's often the first visible symptom of a couple who never learned how to say no to something together. It's worth remembering that this entire model of the wedding is remarkably new. Go back a couple centuries and most weddings were modest, sometimes almost incidental, held in a parlor or a small church with whoever happened to be around. There's even a well-documented period where couples married quietly and simply told friends about it afterward, treating the wedding itself as the least important part of the whole arrangement. The idea that a wedding needs to be the single most expensive day of two people's lives is closer to a 20th century invention than an ancient tradition, which makes the debt people take on for it even harder to justify as somehow essential. Now let me show you the other side of this, because it's just as important. Picture a different couple, married the same year as Diane's first daughter. They didn't rent a ballroom. They got married at a courthouse on a Tuesday morning, then took the 12 people who came out to their favorite restaurant for dinner. Total cost, including the dress she bought off a clearance rack, just under $900. No loan, no debt. They put what they'd saved for a wedding into a down payment instead. 10 years later, they own their home outright on the down payment side, and they're still married, still eating at that same restaurant every anniversary. One of them said later that the whole day felt more like their actual life together starting, rather than a performance for 200 people they'd invite once and barely see again. The wedding lasted an afternoon either way. The difference is what the money was doing for the following decade. Diane, to her credit, sees all of this clearly now. She told a coworker recently that if she could go back, she'd have sat both daughters down before either engagement and said the same thing. Here's what we can actually afford without debt. Anything past that comes out of your own pocket, not mine. She didn't say it, because saying it felt, in the moment, like loving them less. What she's learned since is that the debt didn't prove she loved them more. It just proved she never learned how to separate love from spending, which is a lesson almost nobody teaches anyone before the invoices start arriving. There's a specific moment worth sitting with. The night after her second daughter's wedding, Diane sat at her kitchen table with both loan statements in front of her, the venue's final invoice still in her email, and did the math for the first time, all the way through, out loud, to nobody. $245,000 for 2 nights that were, by every account, beautiful, and completely unremembered in their specific details within a year. Nobody at either wedding could tell you today what the centerpieces looked like, or which appetizer ran out first, or what song the first dance was. They remember that it was warm, that everyone was there, that it felt like a good day. That feeling, it turns out, was available at a fraction of the price. She wasn't angry at her daughters. She was angry that nobody had warned her, years earlier, sitting across a desk from her the way a good advisor should have, that this particular yes would cost more than the down payment on the house she still doesn't own. So here's what actually protects you from becoming Diane. And it isn't complicated. Before any wedding gets planned, in your family or your own, decide the number first, in writing, before a single venue tour happens. Not a wish, an actual number you can pay in cash without touching savings or credit, a number that survives contact with an excited bride and doesn't quietly grow by $10,000 every time someone mentions what a friend's wedding looked like. Then let that number, not the industry's assumptions about what a wedding should cost, shape every decision that follows. If a vendor's price jumps the moment they hear the word wedding, get a second quote without using that word, the way plenty of couples now quietly do on purpose. If the guest list keeps growing to satisfy people who won't remember the centerpieces in 5 years, cut it back to the people who actually matter to the two people getting married. And if you feel the specific kind of guilt Diane felt, the one that whispers that spending less means loving less, recognize that feeling for what it actually is, not love. Pressure, dressed up as love, from an industry that profits every single time you can't tell the difference. There's one more thing worth saying plainly, because it applies whether you're the one getting married or the parent footing part of the bill. A wedding day and a marriage are two completely different products, and only one of them determines the next 50 years. The day is a party. The marriage is everything that happens after the photographer packs up and goes home, the groceries, the arguments about money, the years neither of you sees coming yet. Confusing the two, treating the size of the party as a measure of the strength of the commitment, is exactly the trap that put Diane $245,000 in debt for 2 afternoons she can barely describe in detail today. Diane is still paying off both loans. She expects to be done in about 4 more years, right around the time she'd hoped to retire, which now means working closer to 65 than the 61 she'd once quietly planned for. She's not bitter about her daughters, not even close. She still calls both of them every Sunday, still talks about those wedding days with real warmth. She's just honest now, in a way she wasn't before, about what actually happened, in a way she wishes someone had been honest with her before either invoice ever arrived. 2 afternoons cost her the decade she'd planned to spend not working. When people ask her for advice now, before their own children get engaged, she tells them the same thing every time. Set the number before the excitement sets in, because once the excitement sets in, nobody says no to anything, and the invoice doesn't care how you felt in the moment when you signed it. The wedding was never the expensive part. The yes was. The one is you.